India recently passed a bill that opens the door for changes to the way UPI payments are charged. The bill removes a legal barrier that currently prevents banks and payment service providers from levying a merchant discount rate, that's MDR, on UPI and certain other digital payments, and that immediately raised one question. Will UPI no longer be free? Let's break this down for you. First, what is MDR? It is essentially a fee paid by a merchant to a bank or a payment processor for processing digital payments. UPI has operated under a zero additional charge model, making it free. The transaction, that is. So merchants have not been paying this charge. However, now the government says any MDR, if introduced, will be nominal and limited to a smaller set of merchant transactions. The UPI and Services Steering Committee will decide whether MDR is actually introduced and how it is structured. Now, next, what does this mean for you when you use UPI or a QR code to make a payment next? The government says that person-to-person UPI payments will remain free. So if you're sending money to a friend or family member, there is no new UPI fee. And the government says that the vast majority of merchant transactions will also remain free. But some high-value business payments could be different. So clearly, the next part of this is who could face those higher costs. The likely target is large merchants and high-value commercial transactions. Some reports have indicated that an MDR of around 0.25 or could even be till 0.4% could be allowed on non-person-to-person UPI payments above rupees 2,000, with a cap on the charge. Small businesses below a specified turnover threshold exempt, and that is not yet the final MDR structure. So that means your routine payments for things like milk, vegetables, auto rickshaws, taxis, they are not expected to be affected. Large retailers, e-commerce platforms and other high-volume merchants could bear the bulk of any new cost if it is introduced. Now, just because person-to-person transactions or small merchants are for now exempted from MDR, that does not mean that the consumer will not pay any additional costs. So pay attention here. If a merchant has to pay MDR, who absorbs that cost? The business could absorb it, or they could pass that cost on to the consumer. The government can ensure there is no direct UPI fee on the consumer, but it cannot completely control how every business sets its prices. So the shift to MDR marks a move away from the zero-cost model that helped UPI scale rapidly, but also left banks, fintechs and payment networks carrying the cost of that growth. With transaction volume surging, the government is now looking to create a direct revenue stream to help fund the infrastructure, cybersecurity and technology required to keep the digital payments ecosystem running. The proposed levy is also significant from a trade perspective. Global card networks have long argued that zero-cost UPI gives India's domestic payment system an advantage over international card networks that operate on a fee-based model by targeting only high-value merchants and merchant transactions. The government is attempting to balance two objectives here: keeping digital payments affordable for ordinary users while also making the payments ecosystem more financially sustainable and potentially easing a key point of friction in India-US trade talks.